Hey everyone, welcome back. Before you dive into any crypto investment, it's crucial to pause and analyze the project thoroughly. In this video, I'll walk you through a step-by-step process to evaluate any crypto project, whether you're a beginner or a seasoned investor. By following these steps, you'll learn how to avoid scams, identify promising projects early, and make smarter investment decisions. Let's get started and break down exactly what you need to look for before putting your money into any coin or token. Jumping into crypto without proper research can be risky. The market is full of hype, but not every project is built to last. By learning how to analyze a project, you protect yourself from scams and poor investments. This approach helps you spot real value and innovation rather than falling for marketing tricks. So before you buy, let's understand the key steps to evaluate any crypto project. First thing to check is the project's purpose. Ask yourself, what problem does this project solve? Does it offer a real-world use case, or is it just riding the latest trend? Strong projects like Ethereum with smart contracts or Solana with scalability bring something unique to the table. Always start by understanding what makes the project necessary and how it stands out from the crowd. Let's look at some examples. Ethereum introduced smart contracts, which revolutionized how we interact with blockchain. Solana focused on making transactions faster and cheaper. Render brought GPU sharing to Web3, opening new possibilities for decentralized computing. These projects solved real problems and added value to the ecosystem. When analyzing a new project, ask, what's its unique contribution? Whitepaper is like the project's blueprint. You don't need to be a tech expert to read it, but you should understand the basics. What's the vision? What are the goals? How does the team plan to achieve them? Watch out for vague language, unrealistic promises, or copy-pasted content. A good white paper is clear, detailed, and honest about what the project aims to accomplish. If a white paper is filled with buzzwords but lacks substance, that's a warning sign. Overpromising or making claims without evidence should make you cautious. Real teams explain what they're building and why it matters using straightforward language. If you see lots of technical jargon with no clear explanation, dig deeper or move on. Project's team is its backbone. Check who's behind the project. Are the founders and developers publicly known? Do they have experience in blockchain or tech? Look up their profiles on LinkedIn or Twitter. Projects with anonymous or fake teams are much riskier. On the other hand, credible founders like Charles Hoskinson or Vitalik Buterin inspire trust and confidence in the project's future. Dig into the team's background. Do they have a history of successful projects? Are they active in the crypto community? Transparent teams often share their progress and interact with the community. If you can't find any information or the team seems to hide their identities, that's a major red flag. Trustworthy teams are open about who they are and what they've done. Tokenomics explain how the token works within the project's ecosystem. Key things to check include total supply, distribution, and utility. If a large percentage of tokens are held by the team or insiders, be cautious. They could sell off and hurt other investors. Good tokenomics feature balanced allocation, deflationary mechanisms, and real utility within the project. If you notice that 70% or more of the tokens are controlled by the team or a few insiders, that's a big risk. They could dump their tokens on the market, causing prices to crash. Balanced tokenomics protect investors and support long-term growth. Always look for transparency in how tokens are allocated and used. Crypto project's community is its lifeblood. Check platforms like Twitter, Discord, and Telegram. Is the community active and positive, or is it full of bots and hype? A strong, organic community often signals a healthy project. But be wary of fake followers or aggressive shilling. These can indicate manipulation or a lack of real support. Look for genuine discussions and transparency from the development team. Are questions answered? Are updates shared regularly? Real communities have meaningful conversations and support each other. If everything feels automated or overly promotional, it's a sign to dig deeper before investing. Who supports the project? Partnerships and backing from well-known companies or venture funds add credibility. For example, when Polygon partnered with Disney Accelerator or Chainlink integrated with Google Cloud, it boosted trust. Always verify partnerships on the project's website and official announcements. Don't just take rumors at face value. It's easy for projects to claim big-name partners, but not all claims are true. Visit the official websites of both the project and the supposed partner to confirm. Look for press releases or blog posts that mention the collaboration. Real partnerships are usually publicized by both parties, not just one. Serious crypto project has a clear roadmap, a timeline of planned features and updates. Ask yourself, is the roadmap realistic? Are they delivering on their promises? Consistent progress like regular GitHub commits or blog updates shows the team is active and committed. If deadlines are missed or updates stop, that's a warning sign. You can often track a project's development on platforms like GitHub. Frequent code commits and transparent updates indicate an active team. If you notice long gaps between updates or a lack of communication, it may be time to reconsider your investment. Consistency is key for long-term success. Every crypto project faces competition. Don't just listen to the marketing, compare the project with others in the same space. For example, if it's an AI crypto project, see how it stacks up against Fetch, AI, or SingularityNet. If it's DeFi, compare it to Uniswap or Aave. The best investments offer something new or better than existing options. Look for what sets the project apart. Does it solve a problem better than its competitors? Is it more scalable, secure, or user-friendly? Projects that bring real innovation or improvements are more likely to succeed in the long run. Always do your homework and compare before investing. Security is everything in crypto. Before you invest, check if the project has been audited by a reputable firm like CertiK or Hacken. Audits help find bugs or vulnerabilities in smart contracts. If a project hasn't been audited or avoids transparency, that's a big risk. Open source projects where anyone can review the code are generally more trustworthy. Projects that are open about their code and security practices build more trust with investors. Look for public audit reports and open source repositories. If you can't find any information about audits or the code is closed, proceed with caution. Transparency is a strong indicator of a project's legitimacy. Even the best project can fail if the market isn't ready. Look at the overall market potential. Is the trend growing? For example, sectors like AI, GameFi, or DePIN are hot right now. Also, consider the timing. Are you investing during a bull or bear market? Timing can make a huge difference in your returns. Market cycles play a big role in crypto. A great project launched in a bear market might struggle, while a mediocre one can soar in a bull run. Always combine your fundamental analysis with an understanding of current market conditions. This helps you make better decisions and manage risk. Recap: analyzing a crypto project involves several key steps: understanding the project's purpose, reading the white paper, researching the team, checking tokenomics, evaluating the community, verifying partnerships, reviewing the roadmap, comparing competitors, assessing security, and considering market potential. Each step helps you build a complete picture and make informed decisions. Many investors fall for hype or make decisions based on emotions. Avoid investing just because a project is trending or being heavily promoted. Stick to your analysis and trust the process. This disciplined approach will help you avoid scams and make smarter choices in the long run. Be on the lookout for red flags like anonymous teams, vague white papers, unbalanced tokenomics, fake communities, and lack of security audits. These are all signs that a project may not be trustworthy. If you spot any of these, it's best to move on and find a better opportunity. It's important to trust your research, but always verify the information you find. Double-check official sources, look for third-party confirmations, and don't rely solely on social media or forums. The more thorough your research, the safer your investment decisions will be. Don't just stick to one source of information. Use a variety of platforms, official websites, GitHub, news outlets, and community forums to get a well-rounded view of the project. This helps you spot inconsistencies and get a clearer picture of what's really going on. Social proof can be helpful, but it's not everything. Just because a project has a lot of followers or hype doesn't mean it's a good investment. Focus on the fundamentals and use social proof as just one part of your analysis, not the main factor. It's easy to get caught up in excitement, especially in a fast-moving market like crypto. Try to stay objective and stick to your research criteria. This mindset will help you avoid emotional decisions and stay focused on long-term success. Everyone makes mistakes, especially when starting out. The key is to learn from them and improve your analysis process over time. Keep track of what worked and what didn't, and use those lessons to refine your approach for future investments. Crypto is always evolving, so continuous research is essential. Stay updated on new trends, technologies, and regulatory changes. The more you learn, the better equipped you'll be to spot opportunities and avoid risks. There are many tools and resources available to help you analyze crypto projects. Use platforms like CoinGecko, CoinMarketCap, and GitHub to gather data. Explore analytics tools for tracking token distribution and on-chain activity. These resources make your research more efficient and thorough. Joining crypto communities can provide valuable insights and updates. Participate in discussions, ask questions, and share your findings. Engaged communities often spot issues or opportunities early, giving you an edge in your research. Always be cautious when interacting online. Scammers often target crypto investors through fake websites, phishing links, or impersonation. Double-check URLs, use official channels, and never share your private keys or sensitive information. No investment is without risk, especially in crypto. Only invest what you can afford to lose and diversify your portfolio to spread risk. Use stop-loss orders and set clear goals for each investment. Risk management is just as important as research. Successful crypto investing often requires patience. Focus on projects with strong fundamentals and long-term potential rather than chasing quick gains. This approach helps you ride out market volatility and build lasting wealth. Fear of missing out, FOMO, can lead to poor decisions. Don't rush into investments just because others are. Stick to your research and wait for the right opportunities. Remember, there will always be new projects and trends. Follow credible experts and analysts in the crypto space. Their insights can help you understand market trends and avoid common pitfalls, but always do your own research and verify any advice before acting on it. Crypto moves fast, so staying updated is key. Subscribe to newsletters, follow official project channels, and set alerts for major news. This keeps you informed and ready to react to changes in the market. Develop a clear investment strategy based on your goals, risk tolerance, and research. Decide in advance how much to invest, when to take profits, and when to cut losses. A solid strategy helps you stay disciplined and avoid emotional decisions. Keep a record of your research and investment decisions. This helps you track your progress, learn from past experiences, and refine your approach over time. Documentation is a valuable tool for continuous improvement. Regularly review your portfolio to ensure it aligns with your goals and risk tolerance. Rebalance as needed and stay flexible as the market evolves. This proactive approach helps you stay on track and adapt to new opportunities. Don't forget to celebrate your successes, no matter how small. Every good decision and learning experience brings you closer to your investment goals. Recognize your progress and stay motivated for the journey ahead. The crypto market can be unpredictable. Stay humble, keep learning, and remember that no one has all the answers. By staying open-minded and adaptable, you'll be better prepared for whatever the market brings. That's how you analyze any crypto project before investing. Remember to research the fundamentals, check tokenomics and the team, and never invest based on hype alone. With these steps, you'll be able to make smarter, safer investment decisions. Thanks for watching, and see you in the next video.